Shares of Affirm under pressure today, although well off the lows of the session after Klarna announced it is replacing Affirm as Walmart's exclusive buy now, pay later partner. Our Hugh Sun broke the story this morning, joins us now with the details. Hugh?
Hey, John, that's right. So Klarna will soon offer installment loans to Walmart customers in-store and online, pushing out Affirm later this year. Klarna, which is nearing a highly anticipated IPO, will offer loans to Walmart customers through a partnership with the retailer's fintech startup called OnePay. The loans will range from 3 to 36 months in length, and with interest rates between 10% to 36%, I'm told. The OnePay deal comes at a good time for Klarna as it seeks to generate excitement for its IPO later this year by demonstrating it can break up some of the partnerships that Affirm has. For Walmart, the loans are expected to help it boost adoption of its OnePay mobile banking app among more of the retailer's 200 million plus weekly customers. John?
I guess, Hugh, what investors might be wondering is buy now, pay later a commodity now where they've got to chase these big retailers and it's a race to the bottom margin-wise, or is it an argument for Affirm having not gotten this deal and it not being so bad for them in the long run?
Yeah, I mean, the bull case for Affirm is that they've showed a little bit of discipline here. After our story published, which broke the news, they put out a release saying essentially that this is 5% of their purchase volume, but only 2% of their overall income. So it's a relatively small amount. I think the market reaction today is, John, what is the concern about the knock-on effect? Does this mean they're suddenly vulnerable to the partnerships that people really care about? And that would be Amazon and Shopify. So to your point, I think there is a question about commodification. I think the partnerships are really what fight against that, and that's what people are concerned about.
I want to shift gears, Hugh, since you are a credit card guru here at CNBC. We saw shares of Discover Financial finish down almost 7% today. Capital One also lower on a report that potentially this deal between the two companies may not go forward. I mean, on the heels of comments from the FTC chair to CNBC last week suggesting that maybe some of the guidelines for reviewing mergers and acquisitions from the last administration might not be going anywhere. What are you hearing?
Yeah, and so if you recall, the latest from Capital One was that this deal was supposed to close in early 2025. That is still their guidance. I just spoke to them today. And so just to drill down a little bit in the report was essentially that the DOJ was looking at antitrust concerns as it pertains to the subprime market. And so if you take a step back, DOJ isn't really in the driver's seat here. It's the Fed and the OCC that have deciding power over whether this deal is going to go forward. And as I said before, Capital One is still confident that this deal will go forward.